Largely inline quarter. A couple of beats here. When you're looking at the numbers itself, one was the lower credit cost number, right? The other one was that as part of the commentary, the growth that has been guided for might well come in stronger than the 22 to 24% guided band that Bajaj Finance has guided for at the end of Q4 FY26. They've guided for FY27 growth to be 22 to 24%. And, that could well surprise on the upside, but we will know that, or they will up the guidance only post Q2. So that was the one thing which really stood out. The other piece is they've done around 300 crore rupees of macro provisioning already in this quarter itself. West Asia as well as weaker monsoon, they're trying to factor both of those into those provisions, even though they're not seeing anything on ground. So this is just a safety net which they've created, and despite that, the provisioning was a beat. The reported profitability was around 3 to 4% higher at 6,081 crore versus the expected number of roughly 5,800 crore. So you've clearly seen better than expected set from Bajaj Finance. Could well be in focus just given the fact that they're doing plenty on the AI front. They're expecting efficiencies to kick in. They suggested all of these things on the con call. Also, gold loan growth is something they'll focus on, which will aid the consolidated loan book, which is currently at 5.5 lakh crore. Gold loans could well be nearly 5% of that by the end of this financial year.
Right. So,